Welcome back to Freightways Today. Julie, SONAR, it's that, again, we talked about it earlier in the show. It's that time of year. Or is the data telling us?
So really the data is telling us, so this I know you don't like it when we put all these charts together, but I started here and then we zoom in a little further, and then we'll zoom in a little bit further.
And you can see at the bottom, just for those that don't know SONAR, at the bottom is what we tell what we're actually doing. The only problem, if you don't know SONAR and you're looking on a screen, the reason I don't like it on a screen is because it can overwhelm the audience with all this, charts. Obviously, as a power user, it's really, really powerful how many data points. And SONAR enables you to take random data points across the market and put them in here.
So I like to stack them up so you can really understand the trend and how they affect each other. So this is the truckload rejection index, and then I added in
blue would be
truckload rejection index.
13.57.
That's right. And then I added a second dual axis to then track, so you can see them in line with each other. Accepted SONAR truckload volume index, which is the yellow, and then the purple is the overall volume index. So generally, it's very normal for the purple and the yellow to move together, right? Especially if tender rejections are staying relatively stable, right? The same amount of freight is being accepted or rejected. Where we see the difference and this oddity is over here when tender rejections really spiked. Mm-hmm. And that was that really tight time we saw coming July, around July 4th. It's normalizing a bit. Tender rejections have normalized at that 13.5%, and we're continuing to see accepted volumes as well as overall volumes kind of stay and move together,
so
which sort of is normal.
Volumes are stable.
Yep.
Tender rejections have stabilized. They dropped from where they were a couple of months ago, but down at 13.5%. It feels like this is probably a market low at 13.5% because we know as we head into September, October, November, rejection rates always firm up, even in soft markets. So it feels like that 13.5 is, and that's a great number, by the way.
I think it's a very healthy number. So when we talk to some of our broker customers for SONAR, they said that 8% used to feel like, 8% tender rejections used to feel like, oh gosh, things are tight. And now they feel like it's more that 12 to 13% where things are tight and where they have a little bit more leverage with shippers in the market.
By the way, I think a lot of the way I think about this is, we've talked about this before, is it's not about the actual rate itself. It's like asking, so it's right now, middle of August or late August, we're getting 110-degree temperatures. It's asking what is a hot temperature. If I said it was 90 degrees today, you're like, that's not bad.
Oh, it was 78 when I walked in this morning, and I'm like, this is glorious.
And so it's
chilly.
It's all relative to where you're at. And so really think of it like the temperature. When we're at 13.5%, but we were a year ago down in the 6%, the fact that we're at 13.5%, that's like talking about in the winter when it's 40 degrees, 70 would feel really warm.
That's right.
80 would feel warm. Today, that would feel cool. And so it's the same thing. When we're talking 13.5%, we went through a couple months ago, that was sort of the peak at 17.5 of the cycle. It's cooled off. It's no different than thinking about the temperature.
Sorry.
It's cooling off. We're headed into fall. Now, as we head into fall, as we head into the actual calendar of the fall, in September, we will expect, just like you do in the warmer months, you're going to expect that number to heat up.
Just like spring or fall, when one day you walk outside and it's really warm, and the next day it's really cold, and you have those 40-degree shifts,
it's all
right?
Relative is the important
in those changes of seasonality is when we'll get some of that
volatility. So we're going to expect tender rejections to increase.
This right here, this is a very healthy freight market, in my opinion. You use that Goldilocks term.
Yep, I think
it's that. Now I think we'll head into more volatility.
And
where
it really,
charts won't line up so nicely.
When you have stable tender rejections, it means that no one's getting caught off guard. Now, the brokers that like overflow spot freight, maybe some of the owner-operators would prefer a little bit more volatility, pressure. But when it comes to actual shippers, carriers are getting rate increases that they want. Shippers are not having freight left on the dock. It feels very orderly and feels like, things are a little boring.
This feels like a healthy market to really get your ducks in a row for what you want your spot contract mix to be. Whether you're a shipper, a broker, or a carrier, to have a minute to catch up and figure out, okay, this is what I want my spot contract mix to be. knowing there's going to be a little bit more volatility in the fourth quarter. And then my guess is back to sort of normal seasonality.
I said a freight floor. I didn't like this time. I didn't like stability. Now that's
it's just not exciting, but it's
not
healthy.
You don't get the dopamine hits with the high rips and things like that. It's not as much fun. Now, if you run a trucking company, you love it. If you're a shipper and a routing guide, you love it. If you're a broker and you've got committed freight, you love it. Do you know who doesn't love it? Those high spot people that live and die by spot loads. A little boring.
We'll get to why I think it's not going to be boring. So this is because I wanted it to not be too overwhelming. This is just accepted volumes and tendered volumes, right? So you can see these are accepted, these are tendered, and how they really kind of line up, and especially now are. And this is the truckload rejection index. So to your point,
easier. That's why when we're on TV, it's why I always prefer to have just a single chart. It's so confusing. But this is tender rejections. We saw it peak. It's above 17.5% against cycle peak.
But again, to your earlier point.
Yeah, I mean, look, we were 6.5
January.
years ago.
Yes.
And this was, if you think about it from a comp standpoint, it was really August, September, October was when the sort of first compliance crackdown started. The English proficiency started to take place. The non-domiciled CDL enforcement. We're almost to a year of when those enforcement actions started or really took force. It's going to be interesting to see how well the market responds on a comp basis, year-over-year basis. Really eager to see that as we head into October.
All right, so here's your dopamine hit, speaking towards potential volatility. So I wanted to look at what spot rates were doing, particularly with break check, and if we were seeing anything yet in our data regarding that. This is just 1 month, so that's why it's got such big swings. And this is the daily
percentages. This is a percentage index inside of SONAR. You can change it from actual to percentage.
Correct.
This is looking at percent movement.
So over the course of a month, we're down 0.3%, right?
Yeah. In early August, you had it as high. You saw some movement of 6%. End of the month does drive that.
Here's what I think is interesting, though.
The bottom.
Starting the 22nd through this morning, we're up 7%.
Yeah.
When you look at the daily,
sort of bouncing back to where.
Yep. So I think we're heading back into that stabilized higher spot rates. People anticipating those fall surges, and I think we'll likely continue to see spot rates continue.
And we talked about the fact that Labor Day is later this year, and you have the last minute surge back to school, but people start resuming their business life. Like in Europe, they go on vacation all of August, and they don't really return until September. It's the same thing with a lot of parts of the freight market as people are, getting their kids back in school. Certain parts of the country don't actually go back to school until this week.
We didn't when I was pregnant.
And next week, and really after Labor Day, that's what's driving a lot of this activity. So as we head into September is when you should expect things to firm. And that's when that West Coast freight for imports moving for the holidays, shifting into the supply chains. We've talked about the fact that this particular holiday season is going to be earlier in terms of movement. Retailers are looking for those big pops in retail sales. They also don't want to hang out with a lot of inventory because of all the risks associated with that. So I think we're going to see an earlier peak season, not as big surges, but certainly more orderly.
Yeah, I agree. We'll keep watching this daily spot rate go up. But if spot rates continue to fall or tender rejections change and your routing guides break down, RXO is who you want to call for capacity now.
RXO is our sponsor, and they are here to take if your routing guides break and you're looking for that last minute capacity, particularly as we head into Labor Day where that could definitely happen. RXO has the hotline. They're there available. By the way, talking about South Carolina, Charlotte is where RXO's headquarters are.
Fort Mill is a suburb of Fort Mill, South Carolina is a suburb of Charlotte.
I mean, it is. It's really interesting because Charlotte does punch above its weight in freight. It's got Freight Ladders based there. RXO's based there. Our own Adam Wingfield lives there. But there's a lot of freight activity. We held an event there earlier this year. It was a really cool. I think Charlotte's an underappreciated city.
I think people mostly associate it just with investment and banking, but I think that has led to some logistics.
Center. Largely because of the Wachovia Bank of America transaction. But anyways, we'll be right back.